Hi everyone, and welcome to Swissquote's Daily Market Talk. It's November 26th, and news and discussions about the AI players are heating up right at the moment, with Google being thrown to the spotlight for its Gemini 3 and TPUs, while Nvidia is being bullied on their growing inventories and the way that they booked their revenue last quarter. So the narrative is changing hands, which brings additional spice to the bubble and valuation talk about the technology companies. Meanwhile, the soft US data keeps the Fed does in charge of the market, while Rachel Reeves in the United Kingdom is preparing to announce the much anticipated autumn budget in a few hours from now. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. Now, there's some decent drama unfolding among big technology bros since last week, and Google and Nvidia are right in the middle of it. The former victim in this AI race, Google, which only months ago looked like it could be eaten alive by OpenAI's next generation AI chatbot, is suddenly storming back and in a twist, pushing Nvidia dangerously close to the cliff as it takes the lead in a way few saw coming. To put things in a rapid context, the past 2 years haven't been rosy for Google, I'm sure you realize. Its Gemini model, for example, took time to lift off. It hallucinated and became a punchline and mockery among people who were using these models in its very early days. Then the model gently made its way through end users, but quite softly and silently, until the Gemini 3 hit hard last week. Google eventually got its AI model right and moved aggressively into 3D reasoning, agentic coding, vibe coding, the kind of things, the kind of end products that could mint billions in revenue. But that's not where the story ends, it's actually where it begins. Because as AI chatbots seep into our everyday life, demand for inference is exploding. Inference is when AI takes your request and figures out an answer. And with it, the cost of inference is also exploding. So this is the cost of running a trained model every single time someone acquires it. For OpenAI, that bill for 2024 is projected to hit the $2.3 billion mark, roughly 15 times its training cost. And here comes the plot twist. Meta and OpenAI are reportedly moving toward Google's TPUs, so those are Google's homegrown chips, to run their own models on them because they're cheaper to run and as performant as the GPUs, it is said. Likes of Meta and OpenAI are now said to be seeking up to 4 times better performance per dollar on inference workloads. And inference is the next big thing in AI because it never stops. Every time you chat with a chatbot, the cost accumulates and gets bigger. And inference costs are projected to make up to almost 3/4 of total AI computing costs by 2030, it is said. So the world's biggest AI players could be shifting toward Google's TPUs. They are cheaper, more tailored to AI workloads, and replace Nvidia's chips. I'm going to say it again. The world's biggest AI players could be shifting toward Google's TPUs that are cheaper and more tailored to AI workloads. And that's a real risk for Nvidia, of course, whose client base is nearly half made of these same big technology giants. And this is why, among the accounting drama that also hit the company last week, remember, shed another 2.60% yesterday off of its share price, while Google rallied to a fresh all-time high level while Nvidia was being sold. In the meantime, Meta, for example, boosted its ad revenue thanks to AI as well, but its business model is quite unclear at this moment to many. I'm afraid that Meta is spending billions of US dollars to, unfortunately, transform its social media platforms into random AI content engines for which people will rapidly lose interest, in my opinion. I actually hope they will before we turn into full-blown idiots in front of this AI-generated content. Llama model, on the other hand, is nowhere to be found in serious discussions, and its overspending in computing power could eventually explode in its hands. Unlike Google, which could simply rent its excess power out through through its existing cloud offering to others, Meta must first build a department to be able to do so. So NVIDIA is being broadly questioned. Meta may have reached its limits in terms of its business model, while Amazon is one company that could eventually benefit largely from robotics and 3D real-time uses when the time is right. I'm sure they will be coming out of the darkness as Google did. And outside the US, Alibaba's AI efforts may be paying off as well. The company announced a stronger than expected 34% growth in its cloud business that helped counterweight their spending on consumer subsidies and AI investments. But the numbers couldn't bring investors back on board. Somehow, the share price of Alibaba is struggling to reverse its October to November softness right now. So if we summarize it all, right now, Google suddenly seems to have it all: the data centers, the chips, the AI model, and the interface. So it might be the next $5 trillion beast in the US after it's taken that $4 trillion mark, of course, in the coming weeks or maybe months. But if you think about it, Alibaba also has a lot of these assets in its pockets. It's got the data, it's got the data centers, their own chips, their AI model, and their e-commerce business as well, and an incredible reach within and beyond China. So if you think that the future of the AI business is all in one place, all under one roof, Alibaba is and has always been a good candidate as well, and is trading at a very nice discount. What about Nvidia? Well, Nvidia is struggling since its latest earnings exploded in its hands due to some accounting tweaks that they made and that they didn't even need to make. They have been compared to Enron, for example. They have been booed because of the Google's TPU news that they are going full in with the partnerships with Meta and Anthropic, for example. And they're trying to answer to all of it, saying we are not Enron, or we are happy that Google is doing fine. But there is one thing that they insist on. It is that Google's TPUs are designed for doing one specific function, that's AI, whereas Nvidia's GPUs are compatible with every AI model out there. Will that help if companies just want to run their AI models on chips that just do the job and cheaper? Well, I guess we will soon have the answer to that. But the moment has come, ladies and gentlemen. The competition to Nvidia is now coming from an unexpected direction that could eventually eat into its revenue potential and its market share. So everyone is waiting to see how Nvidia will deal with this. Is it going to deal with it by expanding its customers beyond big technology companies, by rolling out more inference-friendly GPUs, or by pushing deeper into cost-competitive partnerships? We will see that, but Nvidia hasn't said its last word just yet, so keep in mind that a lot of the latest news are still speculation. Meanwhile, the US consumer sentiment is waning right now. More than half of the US strong GDP actually came from the massive AI investments this year, and the retail sales and the PPI data yesterday came to confirm the soft expectations. They were even softer than expected. Although big retailers in the US raised their forecast for the year-end holiday season and said that the holiday season should look fine. And if not, the Fed will be there to save the day, because the expectation of a 25 basis point cut from the Fed in December further rose to around 85% after the latest data from the US that hinted at soft fundamentals. So the US dollar slipped below its 200-day moving average, helping the euro dollar break above the September to November bearish consolidation trend. And cable also extended its own gains into today's budget announcement. A budget that might bite though. There has been a bunch of news and leaks out there about where Rachel Reeves will be squeezing that £30 billion to get the budget right and make both markets and households happy. And eventually, no one will be fully satisfied, of course. But the good news is that the stress and gilt markets have been contained over the past few days, because Rachel Reeves is also talking to investors and not only to people. The bad news is that the yields have barely eased from the levels that they spiked to following Liz Truss' mini budget crisis 3 years ago, and Rachel Reeves has got the smallest headroom on record, giving her no margin at all for any mistake. So today, after the budget announcement, we will have a clear idea on whether the measures that Rachel Reeves will be putting on the table will be enough to keep the gilt markets tidy and in check, and whether the measures will be deflationary enough to convince the Bank of England officials to cut the interest rates in their December meeting, which I think will be, by the way. So if that's the case, the actual levels in sterling look appetizing for top sellers. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.